investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. This is the 9th of November. 9th of November, of course, is Tom O'Brien's birthday. Happy birthday, Tom. Thanks for all that you do. May it be a healthy and definitely a happy year for you. And we're looking at the Dow right now. I've got crude oil. So let me just do this. The crude oil is showing right now the daily chart's made a peak D with a cup formation, retests the left side high, goes above it, doesn't close above it, and pulling back. If you look at the weekly chart right here, you've got your symmetry of the bar symmetry on the left side. Going back down, it took out the left side low, it went to the 75 level, starts to rally, goes to a peak A, and then it goes to a peak B above this down channel resistance line, but it's coming back into it. I've been talking about this for a little while, and it's impossible to say if it's going to unfold, but all the chart formations that I'm looking at suggest that in the shorter term, crude oil is bumping into tremendous amount of resistance. It seems to me like I wouldn't call it a glut, but it looks to me like for a while now there's been enough crude oil to alleviate the bifurcation when you get not enough oil and the demand is high. Then prices tend to rise. But in this particular case, it seems to me there's a kind of there's a balance, and the balance is now slightly changed to more supply, slightly less demand. I don't know if that can continue because we're coming into the winter months, but that's the way it's looking to me. And that just says that crude oil could trade between like 92, it's at 87.38 right now, 91, 92, somewhere around there on the upside. But it could start to make lower lows. If it cracks 85, it could retest the 82s very quickly. That's the way I'm looking, at worst, it's just sideways. That's just what I'm looking at right now. Now let me go to go with that. If you look, Exxon making a peak D today with a doji candle high, a leg D in the weekly chart, leg alternate count GSC in the monthly chart, but it did go way beyond the 105 level that it was some years ago. And it went all the way to the 114.78. What was that yesterday? I saw it now. I can't remember. 114.66 was the high. And it's just a little bit of a pullback here. All the technicals are good, but at the same time, the on-balance volume is a little bit overbought. And you can see the relative strength is now a little bit lower than it was at that peak C. So I'm just saying that I've been talking about a potential top here in oil, but only on the near to short-term basis. The weekly chart, I have to still consider this as leg C in, say, Chevron. It should pull back and then go even higher, but it has made a leg E with a doji candle right at the top. Well, actually, yesterday was a doji candle. The high was 186.38. And yesterday's high was just under 186.25. That's called a Chapman wave 2-bar reversal. And especially when you've got a silent doji from yesterday, in other words, the high that was made the previous day or the day after sees a tiny little doji candle. That means it opened and closed at about the same price. And that always to me says, watch out, because on a very short-term basis, you could start to see some kind of a pullback. So we're watching this very closely. Let's go to MRO, Marathon Oil. Have I updated it? Probably not. This is a leg that they're all making Ds. And 33.24 was the high back in June of 22, all-time high. I think it was an all-time high. Whatever it is, it was the major high this year in Marathon Oil. And retested that 33.24 level 3 days ago at what? 33.42. I'd say that 18 cents or something like that. is a double top of source, potential leg E. So I'm looking, and that's an independent exploration, product energy refining. So they're in different sectors within the overall denomination of crude oil. Now you're looking at the OIH, 313.56. No, I went to a higher high. That was a doji candle right at the top of this particular move at 319.70. Ooh, wow, let me update that. 319.70. And that's the reason why, within the context of the different sectors, even though this is now leg C in the weekly chart of the OIH, the Van Eck Oil Service ETF, I'm just saying there's a really good chance that we've got some digestive phase as the market rotates from the soft commodities like oil to maybe other commodities. Look at gold, the way gold is acting right now. And I don't know if this is a one-off because it's done this exact same pattern before, which looked absolutely spectacular. Gold is up $6 now at $17.21. Look, it's the same thing. We saw that from the 28th, 29th of September, where there was a huge candle, then a long-legged doji. That means it opened and closed at the same price, but a little high. That started a leg A. And that leg A continued with another long-legged candle, but a reverse where it closed at the bottom, and then a huge move to the upside, and then a second huge move to the upside, going to an A. That's the leg A. The moment you make a lower high, that's called a peak A in the Chapman methodology. And then what happened? It made the Eiffel Tower straight up, straight down move, and it retested and fractionally took out the left side low. That was around about the 1626 area. It goes all the way down to the 1620 low of 5 days ago. 5 days ago, and now it's repeated that same move. There is a difference. Look at the weekly chart of gold. You see the way you had, I love this kind of pattern. You see this little inside track. There you are, propellant line right there, and then it makes a little mini channel called Chapman inside, right, propellant track, because it didn't break out by much. It just barely took it out. So there's a very slight declining trend line, and then a parallel trend line, which makes a move up. And look what happened. As it was doing that, the histogram in the weekly chart was improving. Now, I have to say this because I was about to get us a goal for my subscribers, a gold stock, and the move was so quick. 2 days ago was really a perfect time because it looked like it was holding as the dollar was pulling back. Didn't do it, and now it's even higher. So it's gone from the 1620-ish area, the continuous contract, to 1720. That's a 100-point move, but it did that before. So what happens next is going to be very important. But what I'm saying, that's the daily chart. What I'm saying is that the weekly chart has the potential to make this particular pattern right here. That is a cup formation. And if it does that, for the first time now, it's above for the week. It's the week's only halfway through, not even halfway through. We're above the 40-period exponential moving average. It's going to take a lot for the night to cross positive, but this is a really good start. The anti-cross positive stochastic is improving a little bit. I'll be back in a moment, but go through the dollar and all the other instruments.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, so remember in the Chapman Wave methodology, you try to identify the lowest low bar, and if it can get upgraded with the technicals to a buy mode, it means it should go to at least a peak D. 4 higher peaks. It could even go to an E, but that's your objective, is to get to at least a D. Well, lo and behold, the 1 minute chart, people in the den must have seen me do this before I came onto my show during, I think even before, it was just before the 10 o'clock news. I started doing this, and then after the 10 o'clock news. This is the naked chart. Basically, I have the moving averages here, but that's it. So look at the patterns here. Look at the way it finally got to the D and went to the E with a doji candle and then pulled back. Doesn't mean to say that's the end. It just says that was the objective, and it achieved the objective. Let's just see with this naked chart if we can do something else. This is grab gold. Gold continuous contract from this little doji low right here. Let's see if we can count the peaks. You always want at least a peak D. So here it is. Doesn't matter how choppy it is as long as it doesn't take out the starting point. So here we go. A, B, pulls back and does, and underneath it does an A, a B, a C, and a D. And then it goes to E and F. But even if you just skip these things, you would have gone to D and E right there. But this is actually E, then F, and then you get the sharp pullback. But look, the green moving average is still positive here. So let's see the dollar, DXY. Dollar. DXY, there it goes. Oh, right in the correct place. So I need to put a down arrow here because it achieved everything right there. Now let's go to the dollar, dollar DXY. Okay, let's go to the low bar. It could be anything, but I'm choosing this right now. The low bar is right there. And the dollar goes peak A, there's a 1 minute chart, peak B, peak C, and peak D, and then look at that whopping pullback. So yeah, this is the technique, and it's the most simple technique you can find in the entire world, except for one little thing. Simple doesn't equate to easy, because at this point, look, that was a peak A, a peak B, and a C. Now, the way I do it in a 1 minute chart, if I'm using something that's really the commodities based, I try to get in front of it, and I'll call 2 parallel bars a potential peak. It's the only time I do it, but in this case, it would have worked. It would have gone peak A, red peak B, blue C, D, and then it pulls back in the dreaded H pattern. So, okay, I just thought I'd do that because it's just fun to do things live, because there's no way of knowing 100% or even 50% what's going to happen next. The market is the market. So here's the naked chart gone to peak E, and I said, look, the 9 is holding beautifully with the 14-period moving average. So look how it's holding. You could have got out, but normally what I say is if you have, say, the futures or whatever position you have at D, your obligation in money management is to take a little bit off. You can put it back, but at least fulfill that obligation. And then you assess what's going on. All right, so let's get out of this. Enough of that. Let's go to our live charts. Here we go. So what we're looking at here is gold, as I said, holding very nicely. The MACD is good. The 9 is over the 14-period moving average. It did that before when it turned around back in October when it suddenly made that very sharp reversal. Is this different? Well, the technicals at this particular point are very much different to that bounce. You see the width between the pink 9 and the 14-period moving average here late September. Look, the MACD, the histogram was still very negative. And look what happened. The stochastic was under 20%. Now the stochastic's at 20.97 in the weekly chart I'm talking about. And look, you've got the 9. The week is young. Things can change. But at this point, you've got the 9 period over the 14. You've got your dreaded H pattern, which has had two tests of the left side low. And each time it closed above the left side, that September low in the weekly chart, which is important. So if there is a close in the weekly chart above this high that was made a week of the 7th of October, and there is a 1738.7 in the continuous contract, that is, that'll be a big positive and say, hey, now you can go towards the next level of resistance, and that would be 1746.5 from the 16th of September, week of the 16th, and then you could go all the way to the 1800s. As I say, in the 1742, 45 area, already on the daily chart, that'll be above the previous high, and that's, let me make sure that I'm saying 17, yeah, in the 1742, 1745, comfortably above that left side high. That'll be a big thing. All right, let's go to silver. Silver had a much better chart pattern than the gold. It still has. It's made a beautiful cup formation in leg D. The last time it hit peak D back in October, it was under the 200-period moving average, and then it plummeted in that A pattern, uppercase A, Eiffel Tower, straight up, straight down, and did hold the left side low, and that was different to gold, and then it made higher highs, and now this is in leg D. It'll be a peak D if today doesn't go above yesterday's high of 21.72. This is the continuous contract of silver. Weekly chart has really improved a lot. This is leg C, and the monthly chart is improving, but still looks lousy. Platinum, I thought I'd just do platinum, had a question about it. Yeah, this is correct. You were right, Joe, with your question about platinum. It is in leg D. In the daily chart, it's testing the left side high. How many times have we seen this? See, it looks like a crude oil chart, doesn't it? So platinum, the high that was made in the continuous contract the week of the 10th of June at 1027.3. Today's high is 1024.70. So 3 points below it. In leg D, it's going to be so fascinating to watch these double tops, how they work out. Look at this. I had left side, right side price time match in the continuous contract to go to the week of the 25th of November, and the Chapman inside wedge target resistance line, which it stopped at a few weeks ago. This time it's broken out above it. And look at the doji candle right here in leg D. The stochastic's good at 89%. The MACD is good. On-balance volume is very good, but pulling back a little bit because it got overbought. So we'll see what happens there. Next thing, high-grade copper. High-grade copper, leg A. A, B, then it starts a brand new A, B, C, D. This is an A, B. I'm calling this F/C. It looks like more like a C than anything else, but I need to give it the alternate count because on-balance volume is still very weak. So F/C, our copper is doing well, up 0.5. at 3.73, but stuck in the weekly chart of the rectangle formation. Does the 3.80 area become very strong resistance once again? Well, we'll find out. Let's see what else. A question came in, MSOS. I wonder if I've still got this chart because I did them all, but then I had a problem. Advisors, shares, pure US, cannabis sector. Yeah, so this made that like an Eiffel Tower move to the upside. Let me just type this in here. Look, peak A, peak B, basically a B minus, but I'll keep that B here because it never took out the left side low. I'll put an up arrow in here. And I said before that it's actually doing quite nicely by making higher highs and higher lows, very steady. And let me just do this. This is in leg D. And we've got MJ, which is the alternate harvest. It's not as good a chart pattern. ABC. Interesting. Yeah. MSOS. A nicer chart pattern, actually. Yeah, a nicer chart pattern than the MJ alternate harvest ETF. This is the pure U.S. cannabis sector. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, folks, we're back. Let me just go backwards here. MLP, yes. A question about MLP. AMLP is a symbol trading at 40.61, down $1.11. Yeah, I've given it a phantom peak in the daily chart because it happened 3 times. So the third time I said, you know what, I'm going to call that a phantom peak C, and it coincides with the peak D that was made 7 days ago. 8 days ago, and now it's gone down with the dreaded H and it's gone low. So on a very short-term basis, I think it's pulling back. Watch the 39s. That's going to be key support. It's at 40.64. It is a peak C in the weekly chart, a leg E in the monthly chart. I believe this is it must be either natural gas or oil, some kind of dividend-paying stock, and the other one was MSOS. So yes, that's a little bit better chart. You look at the up channel. It's in an up channel, making higher highs and higher lows, but it's getting a little bit overbought on a near-term basis at 1194. It'll break out at 12s. It starts to break out and go for that high that was made in the 13s back in early October. But I think actually it's going to stall right here. So this is the whole thing. And the other aspect, remember, we had a spectacular gains in the MJ alternate harvest a couple of years ago. But I think that you have to wait. And I also think that you're going to start to see the cannabis sector stocks really start to move before there's something being said politically to help that whole sector. And that's my impression, because every time there's a news report and it's, they're going to this, then the stocks bounce like they did over here back in early October. Huge move up. This thing went from the 850 area to the 13s and then plummeted back to 940s. So I think it's going to be the other way around, that you start to see, it's just like a CGC. Yeah, it's starting to build some kind of a base. And I suspect when these start to break out, that's when you get the news, and then probably be sell the rumor, and then they'll start to do something else. They'll become a sector that is very, very encouraging for more intermediate-term buys. But at this point, they're all trying to find. The one that, of course, is always the best, and the one that we don't own, I always talk about it, is the STZ, because it's not just cannabis, it's Constellation Brands, A-shares, spirits, alcohol, cannabis. I mean, you remember I said fantastic company, just one of the best charts you could see in the market. And then back in 2018, so at 236.62, made a peak D in the monthly chart, started coming down. And soon after that, they said, they bought, I don't remember what it was, some cannabis company. And I said, now there's a learning experience, and they will get it right, but they're first going to have to drop. Well, they dropped from 236 down to 144 in March of 2020. That was a beautiful Chapman Roman candle low. It didn't hold the middle of that wick long enough to retest the lows, but it did pull back, and then it started a brand new move, and now it's kind of stuck in a range. Stuck in a range at 243 is not bad when you consider that other charts over the period of this year have really tumbled 20, 30, 40, 60, 80, even 90%. And this thing's almost 243, 261 was the high. Hey, that's pretty good. So SDZ is the one. And the question came in about, was it NEO? NEO, of course, is the, right there, that is a Chinese electric vehicle company. I'd agree. Stay with puts in this particular chart is coming down from 66, let's call it 67, back in 2021, plunges down to the 8s just the other day. Now it's trading, it hit 12s, now it's back at 9.72. It just doesn't look good. The FXI was a question as well. Yeah, it's starting to work its way off the bottom, but there's a lot of work to be done. So much damage to the iShares China Large Cap ETF has been done. I just wouldn't play games with this. Now, just someone said, okay, what about market-wise? Have you discussed the market? Well, let me do this. I'll do this real quickly. It's very simple as far as I'm concerned. The Dow 30 has been the leader for a while. It's in a perfect situation. It was up until last night in a perfect situation with the mix that it has. I can only say up until last night because I want to see how the next week or so unfolds politically and through other areas, because it hit exactly the trend line resistance, this green outside line, trend line, which is part of the inside track Chapman wave methodology. Look how it's been a repellent, and once again, it could turn into a repellent right here. it's got the same. Oh, let me just show you this because you can see the sequence so nicely. Look, I drew this in some time ago. This is the weekly chart. This is the YM. This is the Dow futures trading down 240 right now, 32,935. But I drew this in for the sequence. You know, I know it doesn't look like it, but I really don't like messy charts. Messy charts mean that it's got stuff that I put just to show, but I can see it visually. I don't want to have my eye interfered with, but I'll do this now. Look at this. Every time it's made this cup formation, and I mentioned this is the quickest one that we've gone from towards the lows because it didn't hit the inside track propellant zone. So what we're looking at here is within the context of the time sequence, blue sequence from that peak E to the B minus, and then B minus to the next B minus, and now we've gone to a leg A. It's evened out because this one was 2 bars longer, and this one so far is 3 bars shorter. So within that context, if you look at an average, this is where you would find the sequence says, are we about to once again turn down from here? And I'm very impressed with the way the market has handled a lot of bad news for a couple of months. But remember, as long as the bad news is hanging out there, it means that it's a very quick drop to the downside initially, and then the market kind of tries to figure it out, and then it slows down, and then it moves to the upside. So if you're looking at the monthly chart of and let me go back to the Dow now because it's cash that I really want to be looking at. If you look at the INDU, the strength that's been building in the weekly chart is very good considering this is still only a single leg A to the upside. Does it become a single leg A Chapman wave failure? That's one of the techniques that I talk about when I'm talking about my plethora of my Sears and Roebuck toolbox, all these tools that we use. Well, if it pulls back even to the 31,600s where the 9 and 14 period moving average are just as we're speaking right now, crossing positive L for long, but it's a weekly chart. Don't do anything in the middle of the week. Wait for Friday. You got to wait for the candle to finish. You could go back to just disappearing and pink, and that would be negative. And before, it only had 1 or 2 bars green, and then it turned down. So a lot needs to happen. But the easiest thing for me is any pullback, if there's an entire week without a new high above the high of yesterday, and that is a Dow 33,000, what did I say it was? 33,355, and it makes a peak A, but it's a very modest pullback, and somewhere in here, 32,200 becomes support, and then the following week, going towards the Thanksgiving week, we go to a higher leg B outside of the Chapman wave inside track. That would be very positive. That's positive. Even 80%. That would be very good. I'll be back in a moment. Dow's down 257. The S&P's down 31. Basil Chapman. Can't get two questions hour.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I just went back to the naked chart. This is the 1 minute. You remember peak E, the doji candle said was the objective? Well, look what happened. And I forgot to do that. I should have been doing this while I was talking, because once you get to that level, I invariably say, okay, maybe now we make the H pattern. And then I draw in, I should have done this, because this is exactly what I would have done. And I would have just waited and said, okay, let's see what happens. And here it is. There's your green, because it's on the way up. Look at that, green, on the way down. And then normally I grab a Chapman wave inside wedge, target resistance, in this case target support line, and I draw it to my left side, right side price time match symmetry. And look, there it is. Isn't that nice? And let's make another little dreaded H to test the left side low. So, what can I say? It's a little late for that. But I wanted to use the naked chart just to show particular patterns as they appear live. I forgot to do that. Well, all right. Now, what we're looking at here is the GDX. I'm going to be watching the gold very closely, because this is the GDX I was asked about. Market vectors, gold miners, ETF, extended leg D. Remember, it's a floating letter. So from the moment it takes out the left side high of peak C by 1 penny or a fraction, whatever it is, if it makes a higher high, in this case 25.40 was the high, on the 26, if it goes to 25.41, that becomes a D. Well, that wasn't a D, that was still a C. This became the D, and D, still a D, leg D, until it makes a peak. It's a leg D today. It hasn't made a peak yet. And that would be your objective, to get to at least the D and be in the weekly chart. There's that cup formation I was talking about. There's the symmetry, both in the number of bars, not 100% but exact, but good. And it did the Chapman wave inside track propellant line, and it moved up. And look how close the 9 is starting to get to the 14-period moving average in the GDX. That'll be the first time since back in April, I think it was maybe May, where it crossed negative since the high of 41.61 at peak E in April, that it is potentially, it hasn't done it. It's not even, it's improving, but it isn't yet close. It's going to have to take about another 1.5 or 2 points to the upside for the GDX to do that. I think there's a chance of a little bit of a pullback here. Let's just look at the EUR USD. That is the euro dollar making a leg D, possibly a peak D today. Same pattern as gold. It looks like it's getting ready for a bit of a pullback to test the 0.993 level. Look at the USD JPY. That is the currency pair. Made a peak D, spiral to the upside, and then it comes down and it's making this dreaded H pattern. And that's just saying There's weakness in the US dollar, Japanese yen currency pair coinciding with the weakness of the dollar. Even though they don't go in the same proportions to the upside or percentages, they do move in the same direction most of the time. So here it is, and I mentioned before, there's a long-legged candle here. That's your rectangle formation. If it can't get halfway into that rectangle and start to trade there, making higher highs, trying to test the left side high, you're looking at an H pattern, the lowercase h pattern, just for those of you new to my work, of course, because we're always getting new people here, especially in the den. Look, here it is. 3 patterns, straight up, straight down, cup formation, arch formation. You can mix 1 and 2 or 1 and 3. If it's 1 and 3, that's the dreaded H, because it looks like an H fails at a peak A or a B, only the first or second peak, and then it tests the left side low. That's what it's doing. It did it once. Now it's doing it a second time. Hasn't taken it out. If it closes below 145.113, this is a continuous contract, so that's the price I've got right now on the 27th of October. Then the test of the 50-period moving average right there of 1.44.87 becomes important. But if it closes below that low that I was talking about from October for 2 or 3 days, that's a big negative, and then you'll get your 1-to-1 to the downside. If it goes back, like it keeps wanting to do, above that, it says you're stuck in a rectangle range. Okay, did that. I spoke about NEO. What did I say about NEO? Oh, that's right, China, and then I said FXI, so yeah, not a good looking chart. So just real quickly, my target on Tesla for some time has been in the 170, what did I say it was? I thought I typed it in. The low of March of 2021 was 179, and my target has been between I think I said 181 and 172. That's the initial down thrust, but it's in a sell mode. And so Tesla's down today 2.35 at 188.92. It's made this, you remember the H pattern? Well, it did it once here, made a peak A, made a lower low. Then it made a peak A and then a B. Becomes a B minus because it took out the 198.59 low of October the 24th. So this is not acting very well at all. That's Tesla, and I've been saying for about 6 months now, I've said the Twitter situation, or whatever it is, I can't remember, whenever he starts talking about Twitter, I said that you can run one company extremely well if you've got your focus. To do two, like Tesla and SpaceX, I mean, that requires an inordinate amount of brilliance and focus. But to do three, I said, I don't care what it is, this Tesla stock is in trouble, and I still think it's in trouble for other reasons. Not only that, politically, now you've got people with Teslas who probably hate him because of different things he said, and they're going to say, I don't know if I'm going to make my next car a Tesla. I'm kind of stuck with this, but I don't know. So I think he's hubris. He's taking his brain and he's well, all right, we'll leave it at that. So Tesla, a little problem there. And now I want you to go to the SMHs. This is really important. A fabulous move in the SMHs from the 166.97 low early October. It's gone to a leg E with a little doji candle, pulling back today. But I'm starting to see something, and this is the reason why the question was about the market. And I've been saying for months, I don't see a crash. I see lower lows and lower highs, and at a certain point we will reverse that, because you talk earthquake and you talk the after effect or the aftershock of earthquakes. So I wasn't going to do it, but I'll do it right now. So if I'm looking at my Dow chart, look what we've got here. We've got internal low, residual low that was made. And this is the pattern of the dark news cloud cover. This is the technique that something I built a long time ago, developed as a thesis, and I'm kind of I wouldn't say I'm stuck with the thesis because it hasn't changed, but I'm really impressed at the way it's functioned. So now, right here at this long, look at this trend line. It's not, I haven't drawn in an inside track. I don't want to make it messy, but the DNCC, dark news cloud cover, is forming right here, and it's saying right at this particular period. And I had a subscriber a week ago today, when the Fed came out with the news at 1 o'clock that day. He switched from long positions to the 3 times short ETFs. Brilliant move at 1 o'clock. And I'm not sure if he's still in that move, but that was based on his own techniques and plus Chapman methodology. Congratulations.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, so talking about bar symmetry, I'm just switching for the moment. Look at this with gold. When I was doing my show, and a little earlier on, I said, look, we made that peak F top, and I put a gold 1 minute chart from the low bar, that little doji candle right there at 9:38 this morning. There's a continuous contract. The low was 1712.6. It went all the way to the 1720s. And then look what happened. I don't know why I didn't do this, but I talk about it all the time. And you know that this is what I would have done. I would have drawn in the left side, right side price time match. And that goes to, if I'm very strict about it, I probably would have moved it a little bit to the left, but that's okay. Look, it went all the way to there. There's your arch formation. Bar symmetry. Where's your plumb line? That's the midpoint right there. So I was asked if I would do a little bit more of this during the week, in between other things. Yep, let's just see the dollar DXY. And that made that peak D right there. What was the objective? And look at this beautiful arch formation. So the dollar's only up 31 ticks right now. All right, enough with that. Let's just finish up here. We've got a few moments. XLE, I meant to do this when I was doing, so I'll talk more about it this week, because we'll see what happens if this is a high that starts to see a deep pullback, or whether it's just going to be a minor pullback and then we go to higher highs in this particular pattern that we're looking at right now. Let's get out of it, and we want to go to the XLE. There we are, XLE. Make sure I'm going to the right thing. There it is, XLE. Yes, so there's your doji candle peak F. It's done everything we talked about in terms of the left side, right side price time match, the cup, double cup formation. I didn't finish that up. This is a double cup formation right here. Used to have a little expression for it. I'm not allowed to use it anymore. I won't. So look at that pattern right there. Sunglasses. Oh, no, those are like reading glasses. And yes, I think there's a bit of a pullback coming in the XLE. And that fits in exactly with the time and everything we were talking about. Not a major sell-off, but a pullback. I'll be back tomorrow. Stay tuned for Steve Rhodes and all the great programming here at TFNN. Check out my opening call, my daily newsletter. See you tomorrow. Have a wonderful